On today's World Insight, the Boao Forum for Asia about to kick off amid tough times for the world economy and geopolitics. How can the forum help emerging economies toward global recovery? What's on the agenda?
The key challenge is not inflation. The key challenge is profit erosion of manufacturing sector.
Here's our host, Tian Wei.
Hello and welcome to World Insight on CGTN. I'm Tian Wei. The 2022 annual conference of the Boao Forum for Asia will be held later this week on China's tropical island Hainan. Delegates from governments, business, and academia all over the world will gather on-site and online to discuss economic recovery in Asia and the world. Amid a prolonged pandemic, the forum will focus on green, innovative, inclusive, and collaborative development. On Monday, China released its GDP figure of 4.8% in the first quarter this year, a steady start of its economy as believed by many. So how can emerging economies and developing countries better cope with global turbulence amid rising inflation and the lingering pandemic on top of the conflict in Ukraine? What could be the way around growth hurdles and the massive setback for global recovery? Let's have our panelists. For Boao Forum and the Emerging and Developing Economies in Singapore, we have Bert Hoffman, Director of East Asian Institute at National University of Singapore, former Country Director for China of the World Bank. In Beijing, we have Alessandra Teixeira, who is the IFF board member and former Minister of Development Industry and Foreign Trade in Brazil. I'm so glad to be joined by both of you, gentlemen. So now Boao Forum opens at a difficult time when the world is facing many challenges for the economy. What do you consider as the shifting of priorities, Professor Hoffman, about the latest?
Well, look, the war in Ukraine is coming as an additional shock on a world economy that is only recovering from COVID. And frankly, we're still in COVID. It's just the incident has become less. So we see an inflationary shock. We see a growth shock. We see additions to bottlenecks in the global supply chains. And for some countries, we see clear risks of food shortages. We see clear risk of debt issues that might evolve as countries trying to fight inflation, and especially the Federal Reserve Board, which has a very clear trajectory now of increasing interest rates, which makes countries that have high external debt and high external financing needs quite vulnerable. So it's a very complex situation.
Professor Teixeira, your take?
I think I need to agree with Bert on this. I would like to just add one more problem, that is unemployment, that is hitting everywhere in the world. And but my taking on this is that we didn't manage as a whole world properly the pandemic. We're going for the third year. 3 years in a whole hitting the different economies, and we are not at the end yet. So this is a thing that we need to debate really serious. How is the world governance when we have a situation like that?
Now, one of the biggest things is inflation facing all economies. IMF, a recent number, also makes people very concerned. Now, what do you think are the ways to deal with it? Are we going to see a future rise of inflation further in countries, particularly emerging and developing countries? How to deal with that, Professor Hoffman?
Well, first, we have to note that quite a substantial part of inflation is actually energy related and food related. It's not that people don't use fuel and food, but it could be temporary. And in part it is related to the shock of the war, and it's related to the supply chain issues that we have seen. So hopefully that will resolve itself over time. But a lot of countries see that there might be a structural inflation brewing, and therefore they start taking measures. And the main measure is increasing interest rates. So that will have its effect, and that will lower growth in most countries to temper growth in order to reduce inflation. So we will see less growth in the coming year because of the measures in the monetary sphere.
Emerging economies and developing countries, particularly the least developed economies, are especially hurt. Now, Professor Teixeira, how do you see these economies' capability to deal with inflation?
Very limited, in fact. As we saw, one of the main problems is energy, is food, short of supply of food. Those countries, they have difficulties. If they don't have large areas, they have difficulty. They depend on importation. We know that the price of commodities went up. The price of logistics in the world went skyrocketed. So it's a very, very difficult situation for those countries. They need to be very resilient and to have direct measures to try to avoid what Professor Bert was saying, to be a conjectural problem, to transform that in a structural problem. Because if it is a structural problem, then the damage is going to be much larger.
Mr. Xu Sitao, Chief Economist from Deloitte China, is also now joining us. Mr. Xu, your take on the emerging and developing countries' capabilities?
Okay, I think emerging countries are mixed bag because high commodity prices are actually benefiting certain emerging markets. For example, a country like Brazil, those who are exporting commodities, of course, those who are importing commodities and whose currencies are falling, they are in a very bad situation. China's situation is more unique. The key challenge is not inflation. The key challenge is profit erosion of manufacturing sector. So what China has to do is not to raise interest rate, but to actually the opposite and step up fiscal reliefs to those sectors who are being more affected by COVID and high commodity prices.
The other thing, of course, is how the global supply chains and value chains going to be disrupted as a result of the pandemic and also as a result of the latest Russia-Ukraine crisis. That question has been debated by many already over the past few weeks. But what is the latest situation that you see, Professor Hoffman?
Well, clearly, there's still a number of countries struggling, particularly China is now struggling with the Omicron variant, which is very contagious, very hard to contain. So China's policy does have its effect on China's capabilities to trade and China's capabilities to produce, which I believe will add to the supply chain issues around the world. In addition, it will temper demand in China. And so China, which was projected to contribute about 25% of world growth, if they would have grown with about 5%, this might get lower, and therefore China's contribution to growth would also be lower, which will affect countries in the region.
Mr. Xu?
I broadly agree with Bert. I think there's an additional risk. Additional risk is if you look at inflation shock coming from Europe, and also the risk of aversion due to geopolitical flashpoint, and in an almost perverse manner, US dollar actually is strengthening. And meanwhile, you have major central banks, such like Japan, devaluing the Japanese yen. I think that would create another complexion to regional economies.
Minister Teixeira, your take.
Yeah, I think COVID was already complex. If we look different value chains and different supply chains around the world, from high technology to low technology, it's already hit an impact. We can see that in many value chains, we have shortage of products. It's not talking just about chips. Okay, it's talking about semiconductors, it's talking about the biochemistry value chain. But if we had the Ukraine-Russia war, this gives extra element to it. People, they don't have a big picture on how these sanctions would work around the world, because in taking a large economy like Russia, that's the main partner of Europe in terms of energy, that's a big risk. We are not talking about just shortage, but we are talking about to stop some supply chain in Europe and around the world. So we need to talk very carefully about how these sanctions would apply not just to Russia, but to other countries around the world.
Are we creating a situation in which we're going to trap ourselves, Mr. Minister?
Yeah, it's very early to say, but depending how this war goes and how long it goes and which kind of sanctions we will apply, it is possible. That's what, for example, the German Minister of Finance was saying another day about the situation in the German industry.
Dr. Hoffman.
Well, the supply chain issue is a very particular one, but I think one of the key lessons that countries should learn is not to close themselves off from trade and to stay integrated. As a matter of fact, there is evidence that countries that are better integrated in global supply chains, they've done much better during COVID than countries that have not. Countries that are more diversified in their supply chain, of course, have also done better, and that is quite evident. But it does mean that trade further integration is actually one of the way forwards. And on the specific issues of prices and crisis in food and fuel, reduction in import tariffs, open borders for imports of commodities is actually very important as well to reduce the pressure on inflation.
RCEP, of course, Professor Hoffman, you know that is very much a shining point for the Asia-Pacific region, particularly between China and ASEAN countries. But many argue that is one of the very few shining points, either for the region and even for the world in terms of trade these days, trade platforms and trade agreements. Now, with that in mind, how much do you see there is likely to be the help of trade to, at this moment, to deal with the current difficulties?
Well, look, trade integration and trade agreements such as RCEP are tremendously helpful for long-term productivity development. There's no question about that. In the short term, though, they do not make that much of a difference. I mean, in part because our RCEP measures still need to be rolled out, and so it's not an immediate boost for growth in the region. I have to say, though, that it is clear that increasingly you see more regional blocs emerging, and with the increased geopolitical tension added on by the Russian invasion, you do see more regional integration rather than global integration. And to some extent, that is a risk because it will risk productivity gains that they would be lost.
Minister Teixeira?
Yes, I do agree with Bert on this. I think the integration and I would say openness of the economy can help, especially medium-sized and small economy that doesn't have a full supply chain and need the trade to be a booster. For sure, of course, being a Minister of Trade, I support and I advocate for trade openness, reducing of tariffs and inclusive of tradeness. That's very, very important.
Now, another issue is about the currency. Mr. Xu, you earlier touched on that in your answers, but there has been the accusation against the United States for the weaponization of the US dollar, particularly reflected in the Russian-Ukraine crisis. Now, your take.
Okay, so the sanction itself may affect the dominant role of the US dollar in the very long run. But in the short term, I think many economies, they have to deal with this cyclical challenges, including those who are recovering. I think Japan is a prime example because Abenomics has been practiced for so many years. Arguably, it's the right policy, but we haven't seen the noticeable benefit yet. So naturally, Bank of Japan has done what it has in recent weeks. China is a different situation. I mean, Chinese currency has been super strong in past few years. So you may also argue against cyclical challenges this year, whether we need to loosen monetary conditions further. So, and of course, Europe. So if you look at all this together, I think it's actually very easy, conceivable to see continued strength of the dollar. But in the long run, clearly, this sanction may undermine the dominance of the dollar.
Interesting. Minister Teixeira, how is the short term likely to impact the long term?
It's a very, very difficult question to answer, because we don't know how long it's going to take this short term, right? We don't know I would say the consequences of this war and how long it's going to be. It's already almost 2 months. Many people predict that's going to end first. And of course, these turns is not just the war by itself, but is the consequences of the war in the economies, in European Union, in United States, in Latin America, in Asia countries. So it's a question mark of this in long term. I cannot see the long term. There is a famous economist that you'd say, John Maynard Keynes would say that maybe in the long term, everybody's going to be dead. So I would not work with the long term in this sense. I would stick with the short term, and that's a question mark in terms of currency. Although we see China currency strong, but we don't know what's going to be the relation between US, Russia, and sanctions that many people from NATO are talking about to throw in China. That's very dangerous, in my opinion.
What about the short term? Let's ask about the short term. Professor Hoffman, the geopolitics is evolving extremely fast as we speak. Now, nobody knows what the ultimate answer is. Some say we're already in the Cold War, renew the war, or, the terminologies, there's a long list of those. But, looking at what we are having today, why are the emerging economies and developing countries still extremely vulnerable to a dollar-dominated global financial order? Have some of the currencies from these economies developing to an extent when you see there could be hope that providing less vulnerability in the near term?
Well, so there's two sides to that vulnerability. Of course, there's also the access to international capital flows, which largely is still done through dollars, euros to some extent, to a very limited extent in yen and in RMB. So that's the upside. Countries have access to international capital market, which helps in stabilizing growth. But in times of crisis, as Xu Shitao said, the perversity is that because the US is such a big and deep capital market, there's quite often a flight to liquidity means a flight to dollar treasuries. And that strengthens the dollar, which then increases the burden of debt of developing countries. So a more diversified, if you want, safe haven would help developing countries in diversifying against that risk. For quite a while, the yen was that market. During COVID, we actually saw signs that the RMB capital market, which is really quite large, and the RMB treasury market is quite large, became a bit of a safe haven. Because of geopolitics, we don't see that effect now during the war in the Ukraine. So, but over time, as countries, including China, would open up more on the capital account, would allow more flexible in and outflow, that would provide an alternative of investment and would make the environment for developing countries more stable.
Now, earlier we have seen a lot of consensus reached among developing and emerging economies. Of course, that was before the pandemic. That was also, of course, before the crisis between Ukraine and Russia. How do you see the resilience of these mechanisms and the rethinking of possibilities for cooperation within and even beyond these mechanisms?
I think that's very important. Before we get the COVID and before the Ukraine-Russia war, developing countries, they were prepared to diversify. Okay, what Bert just mentioned, access to capital is a key element for these economies. When you're talking about, let's get out of Latin America and Africa, let's talk about Indonesia, for example. Okay, all the plan of the Indonesia to restructure its investment side, infrastructure, invest more in tourism, was done by the World Bank together with Indonesia, and now has a pause. So the economies are revising its strategy in terms not just investment, but also as monetary and fiscal policy. In a period that we are, it's very tough to do a hard fiscal policy or to try to increase income from the fiscal policy. So monetary policy, it's a very important element now for small and medium-sized developing countries. So that's a key question for us to see how we're going to restructure or redirect our efforts to monetary policy.
Professor Hoffman.
So, look, I think the global institutions such as World Bank, but especially IMF, have tried to respond to the increased volatility that has taken place in the world economy. The extra allocation of $650 billion in SDRs was a very important move. The second shoe still needs to drop, though, and that is to reserve a large part of those allocations for a stability fund for the especially vulnerable low-income countries. That would be a great addition to the stability of the world economy. Second, though, countries themselves can also help, and flexibility in exchange rate remains an important element in defense against shocks from the world economy. So it would mean that your domestic economy is hit less, in part because you can export more because of more competitive prices. And that's an important element as well. So countries do have options.
Mr. Xu.
Yeah, I think the options of all these emerging economies, they do exist. In fact, if you look at our part of the world in general, policymakers are more pro-business. I think you see several offsetting measures taken against not so much the end of the globalization, but say snowballization, the term coined by the economists. I think Indonesia is a good example. In 10 years, this country could crack the top 10, the largest economies. So, the proliferation of regional trade will produce, I think, step changes in the medium-term run, although the short-term impact may not be that noticeable. But again, I mean, one more thing, I think all part of the world, Asia, has learned the lesson from Asian financial crisis and exercising more fiscal prudence and also able to gauge the speed of opening up capital market.
Now, before we go, I want to ask the final question to every one of you. To what extent can you imagine the best scenario and certainly prevent the worst scenario? First of all, what those scenarios are and the ways to get there or to avoid it. Mr. Xu.
I think the best case scenario is a political settlement in Europe. In China, there will be a calibrated approach dealing with COVID. That's best case scenario.
Worst?
Well, worst is you have this protracted war. I mean, I also think the escalation may not be taken into consideration by policymakers, event risk, upcoming French election, and of course, sometimes certain policy just could carry on in its own momentum. That really applies to anything.
Professor Hoffman?
Well, look, the best scenario would be an end to the war, plus a revamp of global coordination mechanisms, especially the G20, which would then create an environment in which we can all thrive. A worst case scenario would be indeed the Cold War II. It would be geopolitical tensions further decoupling and enormous loss of productivity in the world economy, which will affect long-term growth in a major way.
Minister Teixeira?
First, I always think about the positive scenario, okay? And the positive scenario for me is to end the war as fast as possible and to achieve a better governance and coordination between G20, G24 in terms of avoid this pandemic is still going through. Everybody thinks that we are at the end, but the numbers are not quite there yet. You know, for example, my country is losing around 200 people every day. Okay, so to me, that's not the end. Okay, so many countries are going through that. So that's the best scenario for me, is to end that and to achieve coordination in terms of COVID-19 to get this over. My worst scenario, and I don't like to think of the worst scenario, but the worst scenario is still not having coordination of COVID. Is still COVID spread around other places and increasing China, and we postpone the end of this war. That would be the worst scenario, because that's not just bring problems in inflation, but remember, unemployment for developing countries is a huge problem that leads to other social crises, and I don't want to see that in the world.
Alessandro Teixeira, Xu Shitao, last but not least, Bert Hoffman. Thank you so much, gentlemen,
Thank you
for joining us. Really
Thank you.
appreciate it.
Thank you very much.
And that's our panel discussion on the recovery road, even though there are many challenges ahead. That's all the time we have for today. If you'd like to know more, search World Insight. Check out our YouTube channel. Follow us on Twitter and Facebook. I'm Tian Wei. On behalf of my team, thanks for being with us. Bye for now.